Trust is such an interesting topic, I think, when it comes to financial services, especially, whether it's banking or insurance or other large incumbent institutions. I think unpacking what trust means to different generations, different users, different demographics, will yield different definitions of trustworthiness, and therefore how you showcase it and prove that you have it or that you're deserving of it. I think probably it has less to do with size and scale, and perhaps more to do with honesty and transparency and making the customer feel like you really are on their side. A lot of the apps, particularly in the space, there's this sort of natural virality for something like a Venmo, where in order for you to get extract the most value out of it as a user, you have to get your friends to use it too. In order for some of these products to actually succeed as they go to market, they're banking on the influence of their users, not just to say, I like this app, but to say, I like it and I need you to come and participate with me.
We do face a lot of challenges. It can be tricky to move to new platforms. Snapchat is a great example where when we first launched, there was a lot of backlash about the idea of WSJ on Snapchat. It seemed like a mismatch. But one series in particular, I'll use it as an example of a successful moment of transition. Last fall we published editorially a series called World at 2050, which looked at how demographic change is affecting economies both in the US and abroad. And one of the strands of that story was the rise of women globally, young women globally. And the influence that they'll have in world economies. And we took the thread of that story and translated it to a series of Snapchat snaps that told the story in a very fresh way. And the reader response was tremendous, really, really tremendous. And many new customers of ours were acquired through that series of stories. So definitely challenges, but not insurmountable ones. And we're always game for the challenge.
So this is what a financial brand should keep in mind when targeting affluent millennials, is really to provide, have a social presence, right, on social platforms, making sure that they have relationships, they're leveraging the relationships that they've had with their parents and previous generations, that they're leveraging those relationships. And also if they have relationships with the current affluent millennials today, they continue to build those relationships by providing them with the right content and right tools, specifically during their customer journey, especially during the awareness phase. That's where a lot of affluent millennials and just societally, people are willing to do more of their research on their own today to make those right decisions. So having that content there, and also community purpose, right? A lot of people who are of affluent backgrounds, they tend to be more charitable, right? So having that social purpose that aligns with their target audience is also important.
The Microsoft acquisition of LinkedIn is going to have profound implications for financial services. For a lot of ways, LinkedIn has made quite a bit of headway into financial services when compared to other social media platforms. They are recognized as more of a professional social media platform. So where you see things like Facebook or Twitter, they haven't had the same penetration as LinkedIn has had. But there's still challenges for LinkedIn, and a big part of that is how compliance sees LinkedIn and how they have to be financially compliant with FINRA regulations. With the Microsoft acquisition, they might finally break through that wall. The way that LinkedIn is currently done for compliance is that a compliance officer has to answer into the affirmative that they are doing social media. And if that's the case, then they have to go through the checklist with FINRA to confirm how that is being done. Do they have the right archiving in place? Do they have the right monitoring in place? A lot of times they may have those as two separate systems. So with email, it's business mandatory. Of course they're going to have the archiving, of course they're going to have the monitoring, a lot of times with messenger platforms as well and phone. But with social media, it's easy for some financial institutions to simply say, we're not going to make that investment, because you can do the business that you need to do over email, messenger, phone, and other platforms. But now, with an acquisition of Microsoft to LinkedIn, does it make LinkedIn closer towards business critical? And does it help ease the integration of these two platforms? So if we think about how we use Outlook, is LinkedIn profiles going to be attached to Outlook, and does that break you through the necessary compliance barriers? So it's no longer seen as a social media platform, but as an overall communications tool, the same way that you see Microsoft Outlook.